Okay, folks. Okay, folks. Hey, Sean, good morning. Can I get an audio check, please? Testing, testing. Why are there 2 of me? I couldn't do this if I wanted to, create 2 icons of me, but somehow or other, I did it. Ronnie, thank you. Good stuff. Thank you. Okay, you're gonna have to deal with 2 of me. If I shut one of them down, I think it mutes the audio. I gotta get a new software. This is way too much now. Alright, so yeah, Sean, good morning. Great question by Sean. Bob, why is China panicking? Does it have anything to do with their real estate issues? Yeah, it has everything to do with their real estate issues. And uh, I'll put it to you this way. What they did is, I don't know if it's on here. I know it was on Twitter, but they reduced the reserve requirements of the banks by like 50%, which is crazy. So what they just did is they set the stage for the next banking crisis over in China. So yeah, they've had a real estate crisis they've been slapping band-aids on for a long time now. But long story short, I'm not going to go through all this work they did overnight. But man, they opened up the floodgates of liquidity overnight. So much so that the Chinese markets were up about a little over 4% overnight. Look at this. PBOC will also lower rates for existing mortgages, and cut the down payment ratio on second homes from 15% to from 25%. So they're trying to spur inflation. They're worried about deflation over there, and they're going to get it. Another point that I saw that's not published in this article is that back in the heyday of their real estate bubble, they reduced the ability for people to buy multifamily homes and, or I'm sorry, multiple single family homes. Here's the article off of Twitter. China will cut reserve requirements ratio by 50 basis points. Oh, 50 basis points. Sorry, not 50%. So yeah, they opened up the floodgates over in China overnight. So today, what we're going to get, it kind of explains perhaps maybe the Federal Reserve isn't playing as much politics as they might expect. Things are bad over in China. Yes, they are panicking. Uh, the Tuesday economic data, we just get a Fed head out this morning. Schiller home prices, usually inflationary. 10 a.m. report, beware out there, you day traders. You have a 10 a.m. report out there, consumer confidence for September. Now, looking at the yield curve, as we always do, the yield curve spiked up bigly yesterday, and let's see what they're doing today. The 2-year is up 0.025. Wow. Wow. This is a major, if we close this way on the 2s versus 10s, this is probably going to be probably another 3 basis point move on the yield curve to the upside. So let's put that into context, what that means. Monthly chart. Here's where we stood last night. This is not real time. This is last night. This is the gray range, right? The gray range is usually where the stock market buckles over the historic past. Now you're going to see tweets out there by some people I respect, saying that we're at all-time highs. How can you argue with all-time highs? Folks, let's face it, back here in 2000, before we buckled on the uninverted yield curve, we were at all-time highs. 2007, we had an overshoot double top, meaning we had a double top, yet what we did is we took out the prior high, then we made all-time highs and then rolled over. So I don't want to hear any of this stuff. We're at all-time highs. We can't crash. That's that's not what history has shown us. You're looking at it right now. So at this snapshot in time, assuming that we close at where we are or better on the day, we're going higher. And buckle up, buckle up. Let's get to the Fed Watch tool. Let's see what they're forecasting. This is about 47% probability of a quarter basis point cuts, right around 50-50 which way they're going to go next time around. Let's refresh this. This has been moving fast and furious of late, no change. Let's talk a bit about the pre-market activity. NASDAQ was up. When I woke up earlier, it was up about 0.4%. It has gone negative, now just gone positive again. Let's look at mid caps. They're up 0.10%. Dow up 0.3%. All these came in. Look at the double tops here on a 15-minute chart. Same thing can be said of the NQ. Let's go to the E-minis. Again, a double top and a lower high. I'm not saying we're going to close down today, but this is not a great way to start off the day if you're thinking that the Chinese pumping liquidity into the system is going to salvage the market. What traders are saying right now in the pre-market, subject to change, that double top, lower highs, not looking all that great. But I'll tell you, on an hourly chart, I think it was an hourly chart yesterday, closing out the day, we looked pretty good. Inverted head and shoulder setup on the Stokes. I'll show you what that looks like. Invesco. We'll bring up the Qs. It was very prominent on the Qs. Folks, you got to switch over to TrendSpider. Stockcharts.com has just fallen apart with the quality. You can't find your saved charts anymore. Let's go. So here's the hourly chart of the Qs. Look at this inverted head and shoulder setup. Left shoulder, head, right shoulder. So good consolidation at the close yesterday, all day yesterday. So we're not going to rule out the possibility of higher highs here. But the fact that on this news that we have double top broken down to lower lows on a 15-minute time frame doesn't give you the warm and fuzzy. Would I short on this? No, we already have a short position. I'm not looking to add more. Let's take a look at what gold is doing. Gold is threatening to do the same thing. We just haven't broken down yet. I spoke about natural gas on Sunday night. In fact, in the members area, not currently a member to the Contrarian Trader, join our forum because what I did, I'll pop the link in the chat box there. It's free, no credit card required. We went bullish on natural gas. And I posted where is it? I posted a video about the whys behind why we were bull here we go. I'll It's on the feed, so sign up, you can watch the video of why we were bullish on natural gas. I touched upon it again on the live stream on Sunday night, and we're up pretty big on this trade, and you can see that, natural gas overnight is up over a percentage point. This is up nearly 2% earlier, now it's pulling back some. So, we may book some profits here at the open on natural gas, so, more to come, members. We'll put the trade alert in the, live stream or in the feed. What else do we have? Bitcoin, that's looking okay off of its highs. Let's take a look at what the dollar's doing. Probably rising against the yuan. It was higher overnight relative to the euro yen. Let's see what the euro yen is doing. We're always keeping an eye on that carry trade. Yen is down. This is bullish for equities here in the States. Yen is down over a half percentage point. Euro is up 0.08%. Let's check out the Aussie dollar, Japanese yen pairs trade. That's highly correlated to US equities. It's up nearly a half percentage point. So I'm kind of surprised to see this pullback in US equities given some of the currency action here, but it be what it be. Let's go back to the S&P 500. Is this a check back and a retest? They're trying to rally it back now. This is a 4-hour chart. This bar closes at 9 a.m. They could easily push this higher. Crude prices. Wow, crude prices soaring. Crude prices up over 2.5% this morning. Let's check out home heating oil. I have a delivery coming today. Yeah, baby. 2.34% rise. I beat the rise in home heating oil. So a little bit of arbitrage here on the home front. And that's it, folks. Everybody have a profitable trading day. Folks, don't forget, join up. I put the link in the chat box. You can use the QR code in front of you. Link below on YouTube, link above on Twitter. Join our forum, and I'll see you on the other side. Have a profitable trading day. Sean, I'll talk to you. Everybody have an awesome day. Be well.